But one of the things that I've been noodling on and thinking about is, and I was thinking about this prior to the ruckus around Donald Trump and his tariffs and his going after every country in the world. But when you looked at just overarchingly, the U.S. is roughly 5% of the world's population, roughly 32% of the world's GDP.
Yeah.
And yet, if you add up the value, the total enterprise value of assets, companies in the United States, and enterprise value being the value of its equity plus the value of its debt, it's roughly 70% of the world compared to 30% for the rest of the world in terms of value of enterprise value. So in other words, if you had $1 to invest, you could take 70 cents of it and buy the U.S., or you could take 30 cents of it and buy the rest of the world. Especially given kind of what's gone on from a trading perspective in the United States, do you see there might be an opportunity over the next 5 to 10 years where there could be, from a relative standpoint, the opportunity for the rest of the world to perhaps perform better than the United States, given their valuations and so forth, compared to the United States today?
Yeah, well, that's a loaded first question, but we'll try to, go...
I come out swinging. Appreciate it.
Yeah. Well, over the past, let's call it 50 years, it was a period from 2000 to 2010 where the U.S. has strongly underperformed. But that was the anomaly. That was basically the industrialization of China and India. That was the commodity boom where emerging markets did fairly well. So did Canada because we're a resource-based economy. But that's the anomaly. If you take that apart from the history, usually there's a huge premium for being invested in the U.S.
Okay.
And that's linked to innovation, R&D, and the U.S. being a very growing economy. So there's productivity behind all of that, and that's the explanation.
Economic stability, legal stability, ability to conduct business predictably in the States, the brand of the United States.
And that's all put in question right now, right? With Trump. But Trump, he's not going to be around for the next 10 years.
Right.
So there might be some tactical opportunities to go along, and we see the momentum right now is in EFI, especially in Europe.
Right.
That's what we're seeing. We're seeing Canada doing fairly well as we speak, and also parts of emerging markets where people are restarting to buy, those local stock market just to make a point, and just because people are a bit fed up with the policies of the Trump administration. So we think that there could be, this shift in the taste or the appetite for U.S. equities kind of fading a little bit.
A little bit.
For foreseeable future. Yeah.